Hello everyone, welcome to today's session. This is the follow-up live Q&A after the presentation that I gave at Accountex Virtual Summit a few weeks ago. I hope everybody on the call was able to see that presentation and bring making tax digital back into the forefront of everybody's minds. Now, as I said on that event, ordinarily, that would have been at Accountex live in the flesh, and after the presentation, I would have been able to hang around and answer any MTD-related questions that anybody had, and send people over to our stand and have a conversation about how we might be able to help and solve any problems that you're facing. Obviously, in the virtual world that we're now in, we don't really have that option, so we did set up this follow-up event so that we can answer, or at least I can try to answer, any of your MTD related questions that you may have. If you didn't see that presentation or you don't know who I am, then there's a little bio of me up there on screen. I won't read it out. What we did during that event is we captured all the questions that were asked in the panel. So I've got those at the ready, and I'll start getting into those first. You'll notice that you have a questions panel on the GoToWebinar console on the right of your screen. So please do fire away with any questions you have as we go throughout the session. Don't worry about waiting until the end. I'll keep my eye on that question panel. Before we kick off and go through the questions that came in advance, and we had quite a lot of those come in advance, I'll just have a little recap of the MTD strategies that I talked about in the presentation to remind people of perhaps what they should be doing in practice at the moment, and then we'll lead on to the questions and see where the conversation develops. Okay. So these are the different strategies that we talked about from April 2023 and beyond, and of course from April 2023, because that's the mandation date that has been set now by HM Revenue Customs. That announcement was earlier in this year, so it will apply for accounting periods commencing on or after 6th of April 2023, and that's for individuals, partnerships, and potentially trusts that either have trading income or property income in excess of £10,000 revenue. First thing I suggested is that you first identify those affected clients. So how many of the clients in your current portfolio, if MTD were live today, how many of those would be affected? So how many clients have you got that are individuals, partnerships, and trusts that have either trading income or property income that exceeds £10,000, and put a little tag, a little marker on those clients, so you know that those are going to be in the first tranche of MTD come April 23. The plan is obviously for HMRC to roll that out much wider as time goes on, like we saw with VAT. The initial tranche of businesses that were forced into the MTD for that route was slightly narrower than the full population, and that's been expanded out and continues to be expanded out, and we expect to see the same for income tax too. Next item I looked at was about profiling those clients. So once you know who's in first and who might come later, what do you need to know about those clients? So are they MTD ready already? So are they already keeping their records in a digital format? Are they using cloud bookkeeping software that should be relatively straightforward to make the MTD quarterly submissions, or are they a long way from getting their record keeping into a digital format? Because although we as a software company will focus on the tools that can help you make those quarterly submissions and do the end of year submissions, the new version of the tax return, the underlying remit of making tax digital is that the record keeping is done in a digital format in as close to real time as possible. And that's really the big impact, the big effect that it will have on your clients if they're not already keeping their records in digital format. MTD pathways, this is a concept that I really like. Once you know who your affected clients are and you've profiled them, those ones that you've already marked up as MTD ready, fabulous, they're good to go. You can probably park them for the time being, but for everybody else, how are you going to get them to being MTD ready? So what pathway are you going to be able to put them on? You know, if they're not keeping any form of digital records today, if they're just doing manual bookkeeping, then can you get them straight onto a cloud bookkeeping package, or might you need a stepping stone? Might you need to put them on a spreadsheet first of all? Spreadsheets are still digital bookkeeping, or can you get them straight onto your preferred application? Or maybe they're using an application that you don't think will give you the facility to file quarterly, even though it's digital. Maybe they're in a specific industry. Maybe they're in farming and they use a particular software that's built for the farming industry, which you know, one sector where there is a lot of software that's specifically for farming. Are those software companies going to build the MTD submission tools that you need? It's worth seeing whether if they're not MTD ready today, what path you need to get them on. And there's a couple of other paths, and I think these will come up in the questions as well, that I think are worth exploring, and that's the excluded path. So can you get them out of MTD altogether? Can they be considered digitally excluded? Or can you defer them? Are there things you can do so that April 23 date becomes April 24 or even further away? Those are definitely worth exploring so that you can minimize the impact on your practice. Pricing strategy, I won't dwell too much on pricing strategy, but I think we're all aware that there is going to be a significant overhead for every practice when it comes to MTD. It's not like things that we've seen previously from HMRC. So when we moved to self-assessment, although that was a big change, certainly going from prior year basis to current year basis, there was a lot of knowledge to be learnt and disseminated. But in terms of what you're doing, it was still doing an end-of-year tax return under the old rules to an end-of-year tax return under the new rules. It wasn't a huge change. You weren't asking for huge changes of the clients. I think this time around there's going to be a huge ask of each and every client, and then also additional work as a practice to do. So, I mean, if any practice thinks they can do that for free or for exactly the same pricing model they've got today, then very good luck to you. But I think you need to get that strategy in place and determine how you are going to charge, because you absolutely should charge for the additional support that your clients are going to need for MTD. And not every client is going to want that support, and like any service that you provide, some clients are more capable of doing these things on their own. I didn't do tax returns for every client. I didn't do VAT returns for every client, but I can assure you for every VAT return that I did for a client, I certainly charged them for it. And the same would apply for MTD submissions as well. And embrace your digital future. I think that's a message regardless of when MTD comes in. The timing, I mean, we're working to April 23 now. It could just as easily get pushed back again. That's certainly happened previously. HMRC are confident that date is going to go ahead, but my confidence level is probably about halfway at the moment. We'll see if that confidence level increases or decreases the closer to that date we get. But regardless of MTD, I think independently there are advantages to not just moving your own practice to a more digital way of working, but also getting your clients into a more digital way of working. And of course, I'm sure everybody's been trying to do this for years, and not every client is going to be receptive. But I think as practice owners and practice partners, I think you should look at your client base and think, well, which are the clients we really like to work with? If it is the ones that are more receptive to working in digital means, the ones that do take your advice and go with it when you make that advice rather than waiting to the very last minute, then perhaps you can start that transition independently of whether and when MTD comes to fruition. Okay, so let's get straight on to the questions. We had lots of questions in advance, as I said. If there are any, if you As I answer any of these questions, if more come to mind, then please do just fire them into the questions box. That's no problem whatsoever. I'll keep one eye on that questions box and one eye on the questions in advance that came in, and hopefully be able to disseminate a lot of information to you today. So the first question, please clarify, is it starting for 2023/24 tax year? Yes and no. So absolutely, the 23/24 tax year will be the first tax year that it's mandatory for some of your clients to fall within the MTD for income tax regime. Any client of yours that might fall into an earlier tax year will only be an MTD if you and they have decided to enter the HMRC pilot and voluntarily file under MTD early. So 23/24 is absolutely the earliest mandatory tax year. However, the guidance at the moment says that it will apply for accounting periods commencing on or after 6th of April 23. So you are very likely to have clients whose accounting period falls within the 23/24 tax year. So certainly your 30th of April 23 year ends, that falls in the 23/24 tax year, but they're not going to be under MTD until their next accounting period, because the next accounting period that commences after 6th of April or on or after 6th of April for a 30th of April year end is the one that commences on 1st of May 23, and that accounting period actually falls in the 24/25 tax year, if you see what I mean. So if for your average 5th of April year end, yes, it will be 23/24. Any other year end, you might be making the quarterly submissions during 23/24, but we're actually looking at the tax return for 24/25. So it's a little bit complicated, but certainly 23/24, if you're not entering the HMRC pilot, that's the first tax year where you're likely to have clients affected. When we register new clients for VAT, are they automatically enrolled to MTD? I assume this is meant to say automatically enrolled to MTD for income tax. So no, that's an additional enrolment. So even though you as a practice, I'm sure everybody will have already be set up with an agent services account. You'll have clients using the other MTD services, be that VAT or trust registration service that came in before VAT. You're registered, you have that facility. Even if your clients are already in the VAT system, they're not automatically enrolled into MTD for income tax. That will be a manual process, just the same as VAT, getting your clients into MTD for income tax. So obviously HMRC will have a good idea of who's going to fall within that first tranche based on their income for the previous year. But you know, they're not the ones who know whether your clients have exceeded that £10,000 revenue threshold or not. So it will be up to either yourself or the taxpayer themselves to enrol into MTD for income tax. Next question, is the turnover limit of £10,000 based on both the property and trade added together or in isolation? So as I said at the very beginning, there's a £10,000 threshold. So if you have clients who have trading income or property income that is below 10,000, then it's not going to be mandatory for them to enter the MTD system. They can carry on filing under the existing system until otherwise told. But that £10,000 revenue threshold is actually any income of that individual partnership or trust in combination that exceeds £10,000. So if you have property income of £5,000 and trading income of £6,000, then you will absolutely fall within MTD, even though individually they're each below the 10,000. In combination, they're above the £10,000. We've had a follow-up question. I knew we'd get a follow-up question to the 23/24 tax year point because it is a tricky one. So it says it's not clear. If your year end is 31st of March, then your first accounting period in MTD will commence on 1st of April 24. Absolutely. So, in practice, year ends that fall between 31st of March and 5th of April for unincorporated entities, sole traders partnerships, typically we treat them as the same. However, the guidance for MTD is very specific. It says accounting periods beginning on or after 6th of April 23. So if you're preparing accounts to 31st of March rather than 5th of April, even though for tax purposes you may treat them exactly the same, yes, your 31st of March year end for 23, your next period begins 1st of April 23. Well, that's before that 6th of April 23 date. So if you're a 31st of March year end, you won't be in MTD until your counting period commencing 1st of April 24. And for me, that's unless HMRC clock onto this and try to circumvent that rule in some way, shape or form, for me, I would absolutely be looking at every single 5th of April year-end client and thinking, you know what, I'm going to change them to 31st of March because it's going to have very little difference otherwise, but it does defer MTD for another year. I think there might be a question coming up a bit later as to whether HMRC will actually let you get away with that or not. I think when I first thought about it, I thought, yeah, they're not going to let us get away with that one. But actually, they have to come up with a date because it isn't so closely linked to a tax year. I think if they wanted it to be for a tax year, they could have specifically said for the 23-24 tax year, it's going to apply to people in these circumstances. But what they didn't want to happen is for 30th of April year ends to have to start doing quarterly reports almost a year prior. I think they genuinely wanted a real clean start date at the beginning of the tax year and not have it muddied. So I think 31st of March year ends will be absolutely fine to defer those clients for another year. So I'd absolutely be exploring that one. Follow-up question, could you confirm that property income is just rental income that appears on the property pages? I think that's slightly backwards in that if you have property income, then you should be declaring it on income from property on the property pages. So if you have property income that you're not declaring on those pages, then either you've decided it's not property income or it falls somewhere else within the tax return, whether that's, I don't know, overseas property or something like that. The guidance doesn't go into a huge amount of detail, but if it is income from property, then that will fall under the MTD remit. A little follow-up, is there a difference between land and property? So would income from land not fall under, but income from property will? That's a good question. I don't know for sure. I personally assumed it to be both, either income from land or property, but that's a good one. I can certainly look into whether that is the case and whether that distinction has been made. Does that combined income of greater than £10,000 include employment income? For example, if you had £30,000 salary and £3,000 of self-employment? No, it doesn't. It's only trading income or property income. So in this scenario, 30,000 of salary and 3,000 of self-employment, no, that person would not fall under MTD unless they chose to do so voluntarily. Is it correct that smaller businesses only need to submit 3 figures for MTD, sales, expenses and profit? Yes, that is correct. So it's a lot of the MTD submission rules don't replace any of the rules that exist for self-assessment. MTD is still a self-assessment and the normal self-assessment rules apply. And for trades, I think providing your revenues below the VAT threshold, you don't have to analyse out those expenses. You can just lump all your expenses together on the self-employment pages of the tax return, and the same will apply under MTD. If I recall, I don't know 100% for sure, but if I recall, that only applies to self-employment. So if you've got property landlords, quite quite bizarrely, you may be forced to separate out or analyse out the expenses for a property landlord, but not for a sole trader. I'm pretty sure that 3-line accounting rule is only for sole trade on the self-employment pages. Is it quarterly or monthly accounts? You have a choice. In fact, you have more choices than just quarterly or monthly. So as a software company, we obviously want to support whatever your needs are as a practicing accountant. And most of the people I speak to in practice cannot imagine they would want to file any more often than quarterly. They don't even want to file quarterly. So I think for most people, for most clients, you'll be making quarterly submissions under MTD. However, the rules do allow you to make a submission for whatever period you so choose, but it cannot be greater than a 3-month period. So you could make an MTD submission every single day if you wanted to. You could make monthly submissions. I suspect most people will make quarterly. The examples HMRC cite as to why you might want to file a different period is if your work's seasonal. So one of the things HMRC, I'm not sure obsessed is the right word, but they truly believe that what filing at least quarterly will do is give your clients or unrepresented taxpayers an indication early on of what their future tax liabilities will be so that they can prepare for it in advance. So they suggest if you file more frequently, you will have a more up-to-date prediction of what your tax liabilities might be. I'm not entirely sure that many of my clients, if I were just to take the bookkeeping as they prepared it, whether I filed it daily, monthly, or quarterly, would give me a reasonable approximation of the future tax liability without me, casting my professional eye over it, applying accounting principles to it. I'm pretty sure we wouldn't have too many accurate future predictions. I could probably come up with a better prediction in 5 minutes on the back of a fag packet than whatever my client decided to submit monthly from their own bookkeeping records. But I think that's by the by. You have the choice. And I think in my practice, my choice would be quarterly. Are the quarterly submissions discrete or accumulative? They are discrete. So once you've filed one quarter, the next quarter that you file is independent, if you like. You don't file the year to date. That does present a little bit of a conundrum, because if you did file cumulatively, you wouldn't have to worry about transactions that weren't in the records in the previous quarters. You wouldn't have to worry about transactions that weren't recognised. When you come to the end of the year, fine, your client may have, they may be using bookkeeping software, they may have a live bank feed, and all the bank transactions may well be in the bookkeeping system somewhere. They may not have posted all their cash expenses, they may not have posted credit cards. I am not uncertain things will have been posted in the wrong place, capital not treated as revenue and vice versa. So if you were submitting accumulatively, then those kind of corrections and additional information and removal of errors would sort themselves out along the way, but that's not the case. They're submitted discretely, individually. So it does present the issue that if you're submitting quarter 2 and then you realise that extra transactions have gone into quarter 1, we can't do what we do with VAT and just make that adjustment in the current quarter. You're actually supposed to go back and refile that first quarter. Now, I'm sure materiality will come into play. Is it really worth you refiling quarter 1 because a cash petrol receipt was found and added into the bookkeeping records? Probably not. But there's been no line drawn. There's no de minimus amount as to what is considered an accurate enough quarterly submission. I think only time will tell as to whether HMRC feel that the information being submitted contains enough detail that they're expecting. So that's certainly one to watch for the future. Do you know how many quarterly returns are needed for a landlord who is self-employed with year-end not the same as the rental period, who may not even have a tax liability? Is it 8? It's probably 8. So the point that's being made here is, let's say you're a property landlord, you probably are reporting rental income to 5th of April. They're also self-employed. You could have a completely different year end, maybe reporting to 30th of 31st of July. So you haven't got coterminous quarters for your self-employed accounts and your rental. You will be doing separate submissions for both. And if you have multiple businesses, you will probably be doing separate submissions for both, whether they're coterminous year ends or not. So you'll absolutely, in this scenario, be filing 8 quarterlies. You'll actually be filing 11 returns in total. So if you think this client here that's self-employed, 31st of July year end, and has a little flat on the side that they rent out, that you do one tax return, you see them once a year, you do one tax return for them right now, you'll be doing 11 under MTD because you'll have 4 separate quarterly submissions. You'll have an end of period submission for the trade and an end of period submission for the rental property. That's effectively filing those final accounts figures, and then you'll have the final tax return submission. So it's a bit of extra work for sure. Is MTD going to change for the general public, i.e. instead of 1 tax return a year, is Joe Public going to have to fill in 4 tax returns a year? Depends what you mean by Joe Public. I'm assuming that what is meant here is that for somebody who currently does a tax return today but doesn't have trading income or property income, so they're doing a tax return for whatever reason, not from April 23, but I think the long-term view for HMRC is that MTD will replace the current system we have today for filing self-assessment tax returns. So I think we'll see the same kind of story that we've seen with VAT. There'll be an initial tranche of taxpayers that will fall in the first mandatory period, and then that will expand out over time as everyone gets more comfortable with the process and HMRC are able to handle things better in the back end. And I don't know what the time scale is for VAT. I think there's been a 3-year gap between the first tranche, and it's supposed to be covered for everybody. So whether they'll be able to do it in the same kind of period of time for income tax, I have my doubts, but it's absolutely the intention for it to be that way. And actually anybody that falls under MTD that is required to file quarterly for trading income or property income does have the option of filing all other sources of income quarterly as well if they choose to do so. I had a call with HMRC yesterday and they were very keen that as a software company we provide that functionality. I'm not sure anybody is going to be particularly interested in filing bank interest, dividends, gift aid payments, pension contributions quarterly any earlier than they need to. So I don't think we'll be building that functionality anywhere near the same kind of timescale as HMRC would like us to. But I think we will see MTD once it absolutely definitely goes live April 23. We'll certainly see that go in that direction. So what's the deadline for quarterly submissions? It's 1 month, regardless of whether daily, monthly, quarterly submissions, 1 month from the end of the period that you're submitting for. I've been trying to use the word periodic update or periodic submission when I talk about MTD because it doesn't have to be quarterly. I'm kind of resigning myself to the fact that everybody's going to be filing quarterly, so I'll end up using quarterly. But yes, you've got 1 month from the end of the period you're submitting for it to be submitted before it's considered late. That leads on nicely. Actually, how will HMRC deal with missed deadlines, particularly during initial teething period? That's a good question. I think there will certainly be a soft approach, a light approach when it comes to compliance with the filing deadlines. I think when this comes into force, we have seen it somewhat with VAT. HMRC haven't, well, I say they haven't explicitly said what will happen. They've certainly proposed and put out for consultation, which I think has already closed, on what the penalty regime may look like for MTD and all other taxes in future. And I think the proposal that has gained the most traction is a points-based system. So points are awarded for each missed deadline, and depending on what type of deadline it is that's missed, there'll be a threshold after which so many points have been incurred, you'll hit a penalty. So for the annual submission, the equivalent of today's tax return, I think on the second missed deadline, that's when you'll hit a penalty. So you'll be okay if you're late with your first tax return, but you'll get a penalty on the second. With the quarterlies, I think the threshold was set at, was it 4 or 5? 4 or 5. So you could actually be late for, I think, the first 4 quarters, but your fifth one, that's when you'll hit a penalty. And it's a little bit like VAT. You'll then enter a penalty period. So each subsequent missed deadline will result in a penalty until you've had 2 years of good behaviour, at which point things are reset. So not set in stone as yet, but I think that's what HMRC have proposed, and that's the direction we're heading. If the start date is 6th October 23, would it not be likely? This is the point that I brought up earlier. I suggested that change all your year ends to 31st of March, and you've just bought yourself another year quite cheaply. The suggestion is surely HMRC would come up with something to work around that. I mean, it's certainly within their power. So there is primary legislation for MTD, which doesn't say a great deal more than HMRC have the power to create secondary legislation for MTD, which pretty much means they can make up the rules as they go along. So they could do something, but my gut instinct is that they won't. I think they do want to have that line drawn in the sand, and they've drawn it at 6th of April. So it's certainly something I would consider looking at those April year ends. Should we be incorporating sole trader clients to delay MTD implementation? I love how many people are going after this, either this deferral pathway or exclusion pathway. Any way to get your clients out of MTD seems to be a pathway worth exploring. Yes, you can absolutely incorporate sole trader clients and avoid MTD being an issue for them. Obviously, you'll have to consider all the other implications of operating as a limited company compared to a sole trader. But yes, that would do it. So MTD for corporation tax, HMRC have stated that will not become mandatory before 2026. Whenever HMRC use that phrase, not before 2026, in my mind, I think, okay, so that's going to go out a little bit further. But absolutely, if you incorporated your sole trader clients, they would not need to report until 2026 at the earliest. I'm always a little bit wary about suggesting everybody should go ahead and suddenly incorporate their clients because of all the other implications. That's a very good exam question answer. Yes, absolutely. Let's incorporate everyone. That's bought us 3 years, but obviously there are implications of doing so. If you have both rental and self-employment, you wouldn't want to amalgamate them in, say, Quickbooks or Twinfield. We have a very good cloud bookkeeping product called Twinfield. As this would muddy and mix the information, does this mean they would be expecting 2 submissions every quarter? Yes, I don't think you would want to run your rental business and self-employment income expenses through a single account on any bookkeeping package. So yes, you would be doing 2 submissions every quarter. I think that the general rule is that if you are, they kind of align with the supplementary pages of the tax return today. So I certainly had clients in the past that had two, in all honesty, fairly distinct self-employments, but they kept one cash book. And you know what? At the end of the year, I'd lump it all together. I'd probably distinguish the two revenue streams from the two different types of business, because that's the client's probably quite interested in seeing that. A lot of the expenses were kind of shared or used equally to more or less degree across both trades. So I'd quite often just combine it all, put it into one self-employment supplementary page. Whereas I would have other clients that did keep distinct and separate records for different types of business or different facets of their business, in which case I would file two self-employment supplementary pages. And in that context, for those two self-employments, you'd be doing separate quarterly submissions for each of those. So you have a bit of flexibility. I would probably go with what's best for the client in terms of what they're already doing for their record keeping. What can you get them doing, rather than try and force it together just to reduce the number of submissions that you make each year. Hopefully we and other software providers will come up with tools that make the actual submission element quick and easy for you, so you don't have to be making these kind of artificial combined records just to reduce the impact of MTD. Will it be only software that can provide direct bank feeds that will be MTD compliant? Nope. There's no requirement as such for direct bank feeds to exist or be used for a product to be MTD compliant. I think the underlying requirement is that the records are kept in a digital form. So you could keep records in digital form from invoices and receipts. You don't necessarily have to even refer to the bank statements. Much of the transactions may go across multiple bank statements, credit card accounts, cash, whatever it might be. So there's certainly no requirement for direct bank feeds to be involved. At Walters Clear, we're exploring how we can use direct bank feeds without forcing people to use a bookkeeping package. So if you've got clients that do use a separate bank account for their sole trade, or particularly their property income, but don't use a digital bookkeeping package, we're looking at how we can just grab those transactions, automatically categorize them, split them into the quarters, and just file it off to HMRC. It won't be prepared in accordance with GAAP. We won't be looking at accruals, prepayments, capital versus revenue, any of that stuff, but actually it might be a very quick and easy way for those type of clients to just get those 4 quarters submitted, and then you can do all the corrections and adjustments at year end. So certainly something we're exploring, but not an absolute necessity for any MTD solution to be compliant. Have HMRC said that spreadsheets and link software are acceptable, like MTD for VAT bridging software? Yes, they have, privately to us, because I told them that we're going to develop one. Their response when I told them, they seemed a little bit surprised, which surprised me, because if you go to HMRC's website and look at the list of available software options for MTD for VAT, there are over 500, and the bulk of them are bridging solutions. And as a large software supplier, or in fact as any software supplier that wants to connect to HMRC's back-end services, you have to register as a software supplier with them. You form a relationship with them, you get an account manager. So they are in conversation with every single one of those 500 software suppliers, and will have a reasonable understanding of what they are building and what stage they are at in that process. So I was a little bit surprised that it didn't seem that a spreadsheet bridging solution was particularly on their radar, and I also inferred that perhaps other companies hadn't really suggested to them that that's the direction they're going down. We're creating multiple tools, but I'm almost certain that we'll build a spreadsheet solution like the VAT one, because I just think the demand for filing straight from a spreadsheet is going to be with us for a long time. Will we need to submit using digital links, or can quarterly sums be entered manually? Okay, so this is a kind of, again, following on for the VAT one. You might recall that when VAT went mandatory, it was a soft, to call it a soft launch, it was a soft landing period where you didn't have to ensure, as long as the underlying records were in a digital format, you didn't have to have this digital link. You could manually type the totals into those VAT boxes or copy and paste them. I've seen lots of software solutions where you pull the spreadsheet in, but you have to copy and paste those figures. It didn't happen in the software automatically. And that soft landing period, I think, was only for 12 months, after which that had to be a digital link. That figure had to transfer automatically into the filing system. You couldn't copy and paste. You couldn't manually type figures in. We might see something similar with income tax. Nothing has been mentioned of it, which again indicates that perhaps other people aren't thinking about spreadsheet solution. In our spreadsheet solution for VAT, we always had the digital links from day one. We didn't require anybody to manually enter a figure. We extracted it from the spreadsheet and in it went. So I suspect the same thing will happen for income tax, but it won't matter with our solution. We've got a couple of taxi clients. How do you think this would work, getting the cash information from a book to MTD product? Most struggle with technology. Good question. So I take a little bit of umbrance with that most struggle with technology part, because I think most taxi drivers nowadays will be using some kind of application for booking. Very, very popular now in the taxi industry, not just the Uber app, but multitudes of apps. Black cabbies in London have different options for applications they can use to compete with what options are otherwise available for Uber and other similar companies to use. So I would say it's been a necessity for most taxi drivers to use technology to get business, and persuading them or telling them that you're going to be in strife if you don't do the same course of action with your record keeping. They're going to have to find something, or they're going to have to pay somebody else to do it for them. There is no need for anything really to change for the client. It's just their records have to be kept in digital form, and if they don't want to do it themselves, then they're perfectly able to pay you to do it, just as they're perfectly able to pay you today to do the bookkeeping. And if they are going to pay you to do the bookkeeping, I would suspect most practices now wouldn't be filling out a manual cash book for their clients, although I'm sure we'd get exceptions. You would use it in use a digital form. So there are certainly options to help clients that currently do things themselves and do it manually. Once they're mandatory for MTD, it's mandatory that they keep their records in digital form. If they choose not to, then at some point HMRC may discover that and take issue with it by whatever penalty regime is in place at that time. So I think it's an inevitability that they will need to find alternative methods. How do you keep digital records for rental income monthly with no paperwork or invoices issued? Open up a spreadsheet, type in a figure. I think the rental income one's an interesting case. I mean, we're certain at Waltons Kluwer, we're certainly focusing on property landlord cases first, because we think they're the most underserved segments in the market. There are a myriad of solutions out there for regular trading businesses. There aren't quite the myriad of solutions that are suitable for property landlords. So there's going to be a real need there. I mean, setting them up with spreadsheets has got to be the simplest and easiest way. Rental clients that I had every year, I would just send them a template and say, can you just put it in here? Some people would just send an email back saying, yeah, same tenants, rent the same. I spent an extra £200 on painting the outside wall or something. And you know, obviously that's a bit tricky. There will be a requirement for them to keep proper records digitally. We're looking at building applications that your clients can use that might help with that. So in a property landlord case, what I'm hoping we will have for your clients is an application where if they've got rental properties, they can just record the details of those rental properties in the application. So let's say they're renting out a couple of flats, they can just put in the details of, you know, the address of those properties, who the tenants are, how much is paid monthly, and then behind the scenes, we can keep those digital records. So if we know that tenants have been in there for the past 2 years, the rent's £1,000 a month, behind the scenes, we can create those 12 monthly entries of £1,000 and submit those to HMRC as a quarterly submission. So I think solutions will come to fruition that perhaps don't look and feel like today's bookkeeping solutions or spreadsheet solutions that will help property landlords in particular. What if landlords trade via limited company? When will MTD be mandatory for non VAT special purpose vehicle company buy to let? That's quite specific, but essentially it's that 2026 date. So MTD for corporation tax, you know, if they're going to trade via a limited company, they're subject to corporation tax, not income tax. It's going to be 2026 at the earliest. If it does come in 26, which I'd have my doubts. We don't know how wide that window is going to be, whether the same, I'd be surprised if the same £10,000 threshold was there, but maybe. They may decide that only trading companies are included. Who knows? None of that has really been set. But if you've got landlords today that trade via a limited company, no, they won't be in MTD until at least 2026. How long can companies use bridging software for VAT? So this comes back to the spreadsheet point. I think in the early days of MTD, HMRC were clearly not happy with spreadsheets and they didn't consider them acceptable digital record keeping. I think that has completely been discredited now. Spreadsheets are absolutely digital record keeping and perfectly fine. And I don't see any moves within HMRC to press forward and try and change that. So I think for the foreseeable future, bridging software for VAT will be absolutely fine. Expect if the use of spreadsheets naturally diminishes over time as more and more people move on to other applications, then perhaps HMRC will bring it back to the table. But I think certainly for the foreseeable future. Is there a de-minimus limit as to the value of the adjustment that would require refiling for a quarterly submission? Okay, so this comes back to the point that I mentioned earlier, that you filed your Q1, you then come on to Q2 and realise that extra transactions have fallen into Q1. Is there a de-minimus limit? No, there is no limit set or expectation set. There isn't even an expectation set as to how accurate those submissions should be. So I think if it was me personally today, I think if the submission routine was nice and easy, so for example, if I had the client in a cloud bookkeeping application and the quarterly submission is the click of a button, and I get to the end of Q2 and it says, do you want to submit your Q2? Yes. We notice there are extra transactions in Q1. Do you want to resubmit Q1? I probably would just click yes, fine, let's refile Q1. You can refile your quarterly submissions at any point up to your end of period submission, confirming your annual totals for that accounting period. So I think if it's quick and easy, I'd just refile. If it wasn't quick and easy, so if it's a spreadsheet user and require me to do a bit more investigating as to why are the changes, what are the changes, are they significant, then I probably wouldn't bother. Probably wouldn't bother. If the figures look reasonable the first time, then so be it. I'll adjust it all at year end. I have around 15 clients who are going to retire by 2025 and are reluctant to change from their existing record keeping to digital. Are they likely to obtain an age exemption? They are if they're considered to be digitally excluded. and the factors, the fact that they're going to retire in 2025 doesn't really factor into whether they are today digitally excluded. I would certainly be wanting to make applications for these clients and trying to convince HMRC that they are, but if they aren't, they aren't, and whether they're going to retire 6 months into MTD or not, they'll still fall within MTD for that period of time. I did look at some stats on digital exclusion. There was a survey or a research project by HMRC done 5 years ago that suggested 15% of the population are digitally excluded, so are unable to communicate with any government organisations on a digital basis, either from just not having the technology or being able to understand it. And 22% were considered to be assisted digital. So they couldn't do it independently on their own today if you put them in front of a laptop and said, can you complete this process and the government gateway, for example. But with assistance, they would be able to do so. And assisted digital are not digitally excluded, which is quite a tricky argument if you're trying to get some of your clients exempt. They re-ran that research project earlier this year and are now saying that the same 22% are assisted digital, but those that are digitally excluded has fallen from 15% to 8%. Not entirely sure why. Perhaps it's the impact of coronavirus has suddenly forced everybody to be a bit more digital, be using communication tools on the laptops. Who knows? But they are now saying that only 8% of the population are considered to be digitally excluded, and they monitor how many taxpayers are claiming to be or wanting to be considered digitally excluded, and whether there's enough justification for them being so or not. Do you expect small accountants to stay in business with MTD due to extra work and the fees involved? Absolutely. I think small accountants are in some ways much more resilient than larger accountants and unfazed by change. We're all used to changes in tax that we don't like. We've had a procession of chancellors introduce things that don't seem to make any sense and seem quite obvious that the outcome they're expecting from those changes isn't going to be the outcome that they see, and we muddle on and get through it. I think some very large practices may be in a bit of bother because of the difficulties in being able to deliver lower end work efficiently, given their overheads and wanting to exploit their investment for much more complicated work. I think for your average small accountant, it's just another hurdle that the Treasury and HMRC are going to throw at us, and we'll be resilient and get through it, hopefully with the right technology and software tools to make that as easy a process as possible. So that was all the questions in advance, and we are almost up against time, and thanks for those that have contributed questions as we've gone through as well. I just wanted to leave this statement actually that somebody left off after the account tax presentation. Simon Rickard left a comment here which I think kind of nicely sums the situation up. So he says that MTD is an opportunity for accountants. I think it's very difficult when you're in the thick of self-assessment season, and when the Chancellor throws something up on budget day that is either backdated or effective immediately to rather than starting it at the beginning of the next tax year. It's difficult to look at those sweeping changes as an opportunity, but I think if we stand back and look at what the opportunity is, and is it an opportunity to genuinely shape our practice to work only with clients that want to work in a more digital way, and the kind of efficiency gains and advantages we can have with that, then I think if there's opportunity there, we should be trying to take advantage of it. Responsibilities on the clients now to make the transition. Yes, I was proponent of only working with clients that you want to work with, it's very difficult to consciously be turning down work that comes through the door in a business, particularly when you've got staff to pay. But you know, in my practice, I was very conscious that I've got a set client type that I want to work with, and I don't want to have clients that don't fit that mold on my books, because it just you know, it disrupts from what the good clients that you want to work with. We have a part to play in being supportive in that, but those that do not transition efficiently means accountants accordingly and not suffer bending over backwards for them. Absolutely. I can count numerous examples of times when I've gone above and beyond for clients, and it's been unappreciated, and I haven't charged when I should have done. I think the clients that appreciate the work that you do and the advice that you give will be perfectly acceptable of being charged accordingly for MTD services, just like any other. And finally, it will lead to reshuffle of clients amongst accountants based on affordability, and everyone will represent better the clients that are right for them. I think that's a natural shift that will happen. I think practices that aren't geared up to handle MTD for their clients, or that will struggle to do so, will naturally shed clients, or practices that decide, you know what, it's not worth our time to work with clients that aren't going to move with us and take our advice and work in this way. Those clients will either be priced out or persuaded that perhaps this isn't the right firm for them, and be picked up by other firms that are able to support those clients. Because I think it's very easy to stand back and say, look, just work with technology-minded clients, that's the way forward, you know, forget everyone else. Lots of practices I work with, the clients they like working with are the ones that aren't, you know, trying to thinking that software can do everything that you do as an accountant. The ones they like are the ones that, you know, come in with a paper bag and you have the nice conversation with, and you work with them for a long time, you know them, and you know the families and all that kind of stuff. So it's very easy for me to say, yeah, dump those, just work with those new techie clients. I think there will be a reshuffling. You want to work with the clients that you like, that are good for your firm and are rewarding to work with. But you know, MTD is going to have a big impact, and there's only so much that you can do free for your clients, and the best clients will be perfectly comfortable with being charged for those services. Okay, that brings us to the end of the session. Thank you very much for joining me today. If there are any other questions that do spring to mind, then by all means do send them in. We'll be distributing a copy of this presentation for everybody, so you can go back and review any of the questions and answers if you so wish. And we'll also be sending out invites to any future MTD related events that I shall be running. So do make a note of those, and I'll look forward to seeing you on the next event. Thank you very much.